Good morning. Welcome to the BF Anderson Technical Report for September the 5th. Well, we call it trend following report, but let's get into seeing whether or not these trends are improving or not. Well, they are improving. We're seeing here, this is the NASDAQ. As we know, we've been in a correction. We rallied back up to the 50-day moving average. Now, the 25-day moving average has crossed below. Now, what we're looking for is we want to see the index get back above that lower moving average, which is now the 25-day, and we want to see that moving average turn up. Well, it's not turning up, but we are getting back above it, and we are making higher lows, just not making higher highs. So things have improved, not dramatically. However, on the more medium term, we're seeing here the 35-week moving average continuing to be in an uptrend, and the index, meaning the NASDAQ, has held above the 35-week moving average. And just remember, when we violate this particular trend, what it means is that we're going into more of a serious situation. So far, everything is holding up. On the advanced decline line, we're seeing an upturn here, so this is definitely an improvement, and you can see that we're getting good number of advancers versus decliners yesterday. Now, on the high-low index, which is measuring new highs versus new lows, we are seeing a little bit of an improvement there, and it has actually turned up. On the high-low, the New York Stock Exchange new lows, we have been seeing, really for August and early September, we have been seeing an elevated number of new lows on the New York Stock Exchange. So this is nothing more than a caution. This is what we would call a yellow flag. It's not a red flag, but it is saying be cautious. However, on the long-term basis, we're definitely seeing improvement there. I had mentioned in the past couple of weeks that we wanted to see that the upper moving average starts to turn up, and then we get a little bit of widening here. Well, that's happening because as of the month of August going into September, now this is a monthly moving average. This is the 10-month versus the 20-month moving average, continues to stay very healthy. On the equity put call ratio, which is measuring fear and greed, we are still in extreme fear, but we're starting to see some movement towards greed, but we're still in extreme fear. I'll talk a little bit more of that when we get to that value line geometric index. The S&P 500 index, using the 200-week moving average, you can see here that it continues to stay in a very powerful uptrend. We are continuing to make higher lows. We just have not made a higher high, but the trend is definitely looking positive. Now, on the value line geometric, I want to take a minute on this. I was speaking to a friend yesterday saying that the problem we're having here with the market is that the market just has not been broadening out. Now, what I mean by broadening out is that these market cap weighted indexes, now remember the value line geometric is an equally weighted index. So you've got 1,700 stocks. Each stock has the same influence on the index as the other stocks. So you're not getting into this where 5 or 10 stocks are driving the whole index, like you can see in places like the NASDAQ and the S&P 500. You get like a very few companies that are doing well, and as a result, that drives the index. That's not true here with the value line geometric. So what I'm trying to really get people to understand is that this particular index is back down to levels that we were at back in 2014. So for many years, we have seen the average stock really basically go nowhere. And so what I'm arguing is that if this particular index gets into a healthy uptrend like it did back here, and it did basically in here, and we had in here, I really think that's going to be an indication that the market is truly going into a very powerful bull market stage. We're just not there yet. So, basically it's been kind of frustrating. Now on the global Dow, kind of the same story there. We're back down to levels here that, were, back a couple of years ago. And the global Dow, meaning the international stocks, really aren't doing very much. But then again, if you go back and look at these healthy uptrends, We're just not seeing that right now. So we're just, we're not seeing the action in the international stocks that we need to see. Now, here on the yield curve, let's talk about the yield curve. Now, we know about it because the media has been hitting it pretty hard. Historic inversions. We went back and looked at historic inversions, and the recession came basically on average 660 days after the initial inversion. So here we have an initial inversion, and the gain in the S&P 500 going into the recession was average of 32.09, so 32%. So anyway, we've gotten the inversion. Now we're coming out of it. This may be the beginnings of a major rally. Hopefully, if history is true, that's the case. And then we've got really maybe 2-3 years before we hit a recession, according to history. Now, I wanted to point out some other facts about recession fears and so forth. I'm just not seeing it. If we were seeing signs of economic slowdown, we would see it in things like the home construction stocks. But this particular group of stocks is doing really well. In fact, we're looking at maybe buying one. I mean, it's these home building stocks are doing well. So basically, it is also an indication that the mortgage markets and the credit markets are healthy. If credit freezes up, that really is a problem. Now, if we go back in history and we go back to the 07-08 recession, again, this is home construction. This is where we are today. We're in a very powerful uptrend. Now, you can see here, it doesn't look anything like what happened back in 07-08. So just as a comparison, you could say, okay, well, the home building stocks really did indicate that there was some type of credit freeze up, and as a result, the home building stocks went into a terrible downtrend. Let's look at another example. Junk bonds. Junk bonds continue to be in a powerful uptrend. If credit is freezing up, the junk bond market's not going to do well. Let's look at a period of time where credit did freeze up. This again, back in 07-08. The junk bond market basically collapsed. Well, if you look at where we are today, we're not seeing anything that looks anything like this here. So, the recession fears are out there, but I'm not seeing the definite signs of it yet. We would see it in these particular areas, and we're looking at everything. Now, this is the top 5. These are the most powerful stocks in my database. This is a watch list. This is not a buy list. Now, we may own some of these stocks, and I try to point that out. Now, this is a biotech company called Allakos. Gap up on earnings, flag formation. Here we have a company that's involved in solar energy. It's been on the list for a while, however, has somewhat rolled over and gone into a short-term downtrend. I would not touch this stock right now because of this. In fact, it has retraced back below the gap buy signal that it gave back in August. This is Roku. Now, this is probably one of those powerful stocks in the market right now. We do own this stock. It has gapped up and has gotten into what we call an ascending flag formation, and it gapped up again yesterday on very heavy volume, making an all-time new high. Now, if you really think about what's going on here with streaming video, it's a disruptive technology that is basically making the network television station obsolete. If you can get on the internet and use a Roku device to view your programming, why do you need a television station? Maybe local news. That would be about it. Now, this is Shopify. Again, this is e-commerce. Continues to be in a very nice uptrend. However, we did get a breakdown below the 10-day moving average. Nothing to be too concerned about. I would only really be concerned about this pattern if we broke down into here, which would be a violation of these particular breaks of the 10-day. Now, here is Target. They came in with really good earnings. Major gap up buy signal, forming an ascending flag formation. So basically what I'm saying here is we're really not seeing any signs of recession out there. The yield curve did invert, but it could be a year or two or maybe even 3 years before a recession. But recession is probably coming, but just not now. Thank you.